Hey everybody, Cantonese Cat here. This is the monthly chart for the 2 year yield. It looks absolutely exhausted. I've been saying this for quite some time. This is a Bollinger Band, and what you're seeing over here on the orange line is the 20-month moving average. It's just been turning flatter and flatter and flatter for the last couple of years, and really over the last 6 months, it's really starting to flatten out. You're really looking at a very, very exhaustive trend over here. If you just pull up the RSI, you see what I'm talking about. You have a trend line over here that basically has been serving as pretty strong resistance for quite some time now, and basically meaning this whole bull trend right here seemed very, very exhausted. And when it drops, it could drop rather rapidly. Another thing I think that when it drops, it could drop rather rapidly is because the Bollinger Band over here is squeezing. Whenever you have a squeezing Bollinger Band, the next move generally is a little bit more impulsive. It can be very impulsive moving up, it can be very impulsive moving down. But because of how it's kind of flattening over here, it looks like it's trying to do a trend change. Just like how over here, whenever it's starting to flatten over here, it looks like it's trying to do a trend change. And that's exactly kind of what I'm seeing over here. And when it happens, it may surprise people in terms of how fast it could happen. Although I do see that the trend can continue to sort of flatten, it can potentially serve as a little bit of a support over here for a little longer. So when they say higher for longer, it's really not sustainable. Not only is it not sustainable technically, it's just not sustainable when it comes to government debt. The more you have higher for longer, the more you have to pay interest on the national debt. And the Fed has a lot of incentives to trying to cut rates. Part of it is really to try and sustain the government debt to make sure it doesn't get blown out of proportion. Another part is, whenever when they sniff out that inflation is starting to have any sign of disinflationary forces coming in, they're going to want to try to do quantitative easing as much as possible. One thing that I was noticing is, I've been noticing for quite some time, and of course I'm not the only person who's been noticing this, but one thing I've noticed for a very long time, oil really looks really weak. And no matter how much Middle Eastern conflict you're talking about, like oil prices just kept dropping. And you remember what I was talking about when you're looking at a trend change, right? Now it's starting to flatten over here a little bit. It does look like you might be at a little bit of a risk for developing a little bit of a bull trend over here because you do have Bollinger Bands over here squeezing, right? So there's a lot of fear in terms of whether or not oil is going to end up shooting up. But a lot of things don't really make sense. For example, the Middle Eastern conflict, for whatever reason, was associated with oil dropping. Same thing with the Russia-Ukraine conflict. Whenever everybody was like super scared about the Russia-Ukraine conflict, actually was associated with oil price dropping over here too from January to February. So this kind of pattern is kind of weird when it comes to oil conflict because it doesn't really seem to match what the traditional conventional wisdom would be. And instead of looking at the Bollinger Band to kind of scare you, I'm gonna do a little bit of a different thing here. I'm gonna look at the Ichimoku cloud. What you're seeing over here is that the price of oil has been kind of way above the Ichimoku cloud for quite some time, and you're starting to have a lot of trend exhaustion over here too. When it comes to oil, you had a bearish cross over here of the Tenkan and Kijun. The leading line is crossing underneath the lagging line. So this is a little bit of a bearish cross over here, right? Had a little bit of back test over here of the lagging line, the Kijun, got rejected, right? So far it's been trying to bounce above the Tenkan to try and reclaim the Tenkan, but so far it really has been unable to do so. If anything, last one kind of closed as a little bit of like a inverted hammer or like a shooting star type monthly candle over here, which is generally considered to be bearish. The next thing you know, what was price doing so far for the month of May is that it broke down back inside the cloud, right? Whenever things are way above for a long time, it starts to break up, inside the cloud. There's a risk for it to go to the bottom of the cloud. There's also a risk for it to fall underneath the cloud, right? It's just happens whenever things are back above the cloud, but things start to fall underneath. You can have a potential breakdown of the cloud, and it could potentially go down a lot lower. So judging by the Ichimoku cloud, I'm not in favor of being in oil stocks at all. Another reason why I'm also not in favor of being oil stocks because those CNBC pundits couldn't shut up about oil again. They think oil is going to outperform, which to me makes basically just says stay the heck away from it. That's what it means to me. Um, And there's a lot of concern when it comes to oil prices. Now, I don't want oil to plummet all the way down, right? If oil plummets all the way down, you're talking about recession. There's no demand for goods, travel, nothing, right? You don't want that, right? But I think a little bit of oil going down to like the 60s, maybe even touch the bottom of the cloud over here, bounce around, may even go down to like the 50s over here, could be favorable for the economy. And part of the reason why people are trying to justify rates higher for longer was because they're worried about inflation, but like oil doesn't look like it's that strong. But I think a lot of people have a lot of recency bias when they remember this big parabolic bull trend with inflation. And they all get scared that there's going to be, the Fed's going to come in and rate hikes again. It's going to end up deflate the stock market and also deflate the oil prices over here as well. But you can't have it both ways. You can't be scared about rates higher for longer because inflation is coming, and next thing you know, you're seeing deflationary forces and you're worried about recession. Like, that just doesn't make sense. I think a lot of people are scared about the Fed may not know what they're doing, whether or not they're going to having delay for too long, and whenever they're going to start stepping in, it's going to be a lot of deflationary forces, and you're going to end up having a lot of concerns for irreversible recessions happening, unemployment starts to jump sky high. Those are all fears, right? You don't think the Fed's worry about that? You don't think the Fed, whenever they can sniff there's an opportunity to start printing money, they're not going to print money? Let's look at another chart over here. GSG, right? This is the commodity index. It basically has a very, very same look. It does look a little bit more bullish over here. A little bit of like an ascending triangle over here, but it did have a bearish cross. And price did try to break above the monthly Kijun over here, got rejected, right? And it also had a very, very similar kind of look over here with like a shooting star top over here. So far is favoring for commodities to go down further. Like so far we're looking at all these indicators, and inflationary forces are not really that big of a concern, even though the most recent trend over the last 4 months has been going up, and everybody's worried that it's going to keep going up. But in reality, I think it's just trying to backtest some of these resistance above. So yeah, I don't know. I'm not really that scared now. If you look at the index fund, like this really tells you what liquidity is doing, right? Ever since the great financial crisis, liquidity has been going up, and it's been just slowly channeling into the US stock market. And I would also argue that this reflects a lot of global liquidity as well. The reason why is because the global liquidity generally likes to go into the US stock market because we're got more political stability. We are investable. We have some of the biggest and best companies in the world that actually does make a difference in the world in terms of changing it, including Apple, Microsoft, Google, Amazon, all these companies, Nvidia, all these companies are actually making a dent into the world in terms of changing it. So you're going to have a steady flow of the global liquidity coming in. But even if you do, you still see some cycles. Like this is like a little cycle over here. This is another cycle over here. This is yet another cycle over here, right? This over here is another cycle, right? And right now I think we're just kind of starting to begin another cycle. And this could last for a while because each of these cycles generally has about 2 to 3 years of up, and the next thing followed by maybe about a year or sideways or a year down. Same thing over and over again, right? Now, you're not going to be able to see the cycle as clearly on the S&P 500 because it's more steady. But if you look at more, cycle dependent, more liquidity dependent index, which is the Russell 2000, represented by IWM ETF over here, you're going to see that the small cap stocks are going to be a lot more sensitive to economic activity. They're going to be a lot more sensitive to debt. You're going to be a lot more sensitive to rates, things like that. The simple reason is because they're smaller cap stocks. A lot of times they're more, in debt. They don't have as much cash, and they're going to need to, borrow funds, and they are going to be a lot more susceptible if the economy is going through, a little bit of a mild recession. You'll be able to see it here on the small caps, right? But you might not be able to see it on the large caps as well, right? So if you look at that again, the cycle generally goes about 3 or 4 years, right? And I think we just have ended this bear cycle over here. Really, the bottom I think is put in around October 2023 for the small caps, and right now we're just kind of starting a little bit of a new cycle over here on its way up. Because if you look at the Bollinger Band, like this looks very much a different look compared to what the yields are doing, right? This is basically a beginning of a very powerful bull trend potentially starting, right? You have a 20-month moving average really starting to curl up over here. You look at what the yields are doing. The yields are doing the exact opposite. The yields are basically having a 20-month moving average flattening and potentially having a little bit of a trend change, right? So you're seeing a little bit of a kind of like a two different tails over here, right? Very, very clear. And another thing to, kind of show you too, if you just zoom out here a lot more, you're gonna see that this whole pattern here happens over and over and over again, right? Whenever you have the 20-month moving average start to curl up, this is the beginning of a very powerful bull market that can last for anywhere from like a year and a half to 3 years. 3 years, it may be like, 2.5 years, 3 years. This might just be the beginning of this, is kind of what we're seeing over here, right? And it's also a bull market just by looking at the weekly chart. If you just look at what the weekly moving averages are doing, 20 is above 50 is above 100. This is a bull trend, and this just really recently started just a few months ago, right? Going back out to the monthly over here, and if you are to look at the Ichimoku cloud, that also will tell you a little bit of different information over here. Ichimoku cloud gives you the Tenkan Kijun, right? You have a cross over here, which leans bullish. You have a cross over here, which basically is the start of this big giant bull market over here. You have a cross over here, which is basically the start of this big giant bull market over here, right? And you also have a cross down here too, which is the start of this big giant bull market. So we just recently had a cross. As a matter of fact, I think these two lines, instead of just crossing over one another, they fuse, which is another way that can set up a potentially very powerful move. When you see something like that, just like when I was seeing with what was I seeing with Ethereum? Whenever you see something like that where the Tenkan and Kijun just kind of fuse, it can end up forming like a katana type thing. They just kind of push price up a lot higher whenever these two fuse. And I'm starting to see that IWM, the Russell 2000 small cap stocks, are having a very, very similar setup over here. So it does make me wonder. Again, there are a lot of things that are also telling you this is a bull market because it tested the bottom of the Ichimoku cloud on monthly and bounced up, back tested the top of the cloud. Usually this is kind of what happens before bull market. It tested the top of the cloud at least before bullish continuation. What you're seeing over here last cycle, same thing, right? This is COVID went way underneath, went way impulsively back up above, back tested it, and then just bounced, right? Over here, same thing, tested the top of the cloud, went up. Over here, same thing, tested the top of the cloud, went up. I think we are setting up for some potential bullishness over here, which makes me find this to be still quite a favorable setup. Another favorable setup is if you look at the Black Cat Fund indicator. A couple of things is happening. One is the whale inflow is coming in. Really over the last 6 months, you can see that whale inflow just keep on going up and up, right? Price really went sideways for a majority part of this, right? Last time something like this happened where price just kind of went sideways for months and whale inflow goes up, followed by a big explosive move, right? Last time, the time before that when it happens, price went sideways over here for a while. You have the increasing inflow, next thing you know, big explosive move, right? Same thing over here, right? Price went sideways over here for quite some time. You have increase in inflow. Next thing you know, you have a gap up over here that still hasn't been filled, even up to this date, right? So there are a lot of things that are telling me that the economic cycle in terms of the bull market may just be beginning based on looking at the Russell 2000. If you believe in cycle. If you don't believe in cycle, then I don't know what else to say, right? There's always going to be outliers, but general things tend to follow a cycle, and this is what I'm seeing. And right now my bias is that this is a bull market, and this may just be like early innings of it, maybe like the third inning of it. So just to kind of summarize, like if I had to put everything together, it just seems that the government cannot really sustain high rates for that much longer. It just keeps on looking exhausted from multiple angle, and it also there's not really any particular reason for rates to really stay up that high any longer because a lot of commodities, including oil, are starting to look kind of weak, having some back tests that are failing, and the price action for these oil and commodities just started to look relatively weak. So because of that, I think the bond market is really sniffing out, hey, something's not right here. I think the Feds probably won't stay up that much longer, higher for longer. And sure enough, like even the Fed is starting to sound more and more dovish, even though the inflationary narrative is still out there. Which again, I don't know why, because of how weak oil is looking, because commodities also starting to look a little bit weaker. When you're also looking at the greater trend over here, like this is the S&P 500. There's no doubt that this is a bull market, right? The QQQ, which is the Nasdaq ETF fund. There's no doubt this is a bull market, right? Dow Jones Industrial Average. There's no doubt this is a bull market, right? And the final step over here to establish that this is a bull trend would be even the Russell 2000 is basically forming these higher highs, higher low, higher high, just form a higher low right back test here on the back on the top of the cloud. And it looks like it might be getting ready to go here. The correction is expected because the price just simply went way above the Tenkan, the blue line over here just went way above the Tenkan, right? When the price is way above the Tenkan, you're gonna end up having some corrective move, either sideways to wait for Tenkan to kind of catch up, or you might end up going down to touch or get close to the Tenkan, right? We did that here for the month of April, like for the month of March, way too far, way too fast. April, corrective move, right? Bearish engulfing candle. Am I scared about it? Not particularly, because a lot of these like bearish engulfing candle for the monthly chart generally don't work out. Sometimes it works out. Like over here, this bullish engulfing candle works out, right? Over here, this bullish engulfing candle, it didn't really do anything, right? And over here, there's a little bit of bearish engulfing candle that didn't really do anything. This bearish engulfing candle is sure enough, to follow through, but it doesn't always have to be, right? Bearish engulfing candle, nothing happened. And over here, big giant bearish engulfing candle, nothing happened, it just kind of went sideways. So I'm not really that scared about this bearish engulfing candle, although a lot of people are going to look at it and they're going to get scared. I'm not really getting that scared from it because we already de-risk a lot. This is a bull trend and we're getting closer to Tenkan. I actually think this is a pretty favorable setup. When price get way too far above the Tenkan line over here, it had to correct sideways for months, right? Wait for the Tenkan to kind of catch up, and then it did, right? So again, price went way above. You're gonna have a little bit of a back test, or at least get closer to Tenkan before the next leg up. So none of this is really that surprising to me in terms of price action. I'm not really worried about any technical damage from the month of April. I'm still thinking that there's going to be a bullish continuation. Whenever this move set over here is done, it could be pretty powerful. I don't know if it's going to end up setting off in the month of May. It's going to end up setting off the month of June, July. I don't know exactly, but I do know there's a lot of bullish energy that's being built up over here. You basically had price kind of went sideways for about 2 years. A lot of energy is being built up, and when it explodes, it can explode pretty far above. And I think it's above because I believe in cycles. And I think it's above because I think that there's not really any particular reason for the Fed to, continue quantitative tightening. If anything, I think they're going to try finding a kind of excuse to kind of swing the other way. If anything, I think the oil narrative is overblown. I think the commodity narrative is a little bit overblown. But that's just me. I'm just ahead. I could be wrong. This is all speculation. These are all technical analysis of what's going on in the real world. It does play into a little bit of psychology. A lot of time, these oil prices and commodity prices are all manipulated. So I can only kind of show you what I'm seeing in terms of which way I think they might manipulate it. I think most likely these prices are going to end up being manipulated to the downside to give the Fed an excuse to do quantitative easing, to give the government an excuse to print money so they can win elections so we don't revolt. That's kind of how I think it generally rose. And then on top of that, you also have China is really starting to start its stimulative efforts, and money is probably going to end up flowing to the U.S. Money's probably going to end up flowing to S&P 500, and whenever S&P 500 gets so high so fast, you're going to end up having the money start rotating to the IWM, to smaller cap stocks, and Bitcoin. So even though there's increase in the global liquidity, you're going to start seeing China probably end up going to perform pretty decent. I have seen some charts that are looking a lot more and more bullish when it comes to the Chinese stock market. But is whether or not it's sustainable, I don't know. Right? You look at the Hang Seng Jiso, Hang Seng index, you can see that it really is looking like it's forming like a very nice Adam and Eve type pattern. And right now, the price is challenging the Tenkan over here, is able to flip the Tenkan from resistance to support truly, and is really able to reverse this. I think there's a chance that the Chinese market could continue to start to recover. Although I don't know how temporary it is, because they do have real economic problems. They're going to have a lot of stimulus that are coming in to even really try to save their stock market, to save their economy. And in order for them to do that, a lot of money is going to end up flowing out of China and come to the U.S. and come to Bitcoin. So we'll see what happens. I'm just a cat. I'm just talking. Thank you so much for listening. Have a good one. Bye.